Vendor setup and paying vendors is a critical part of bookkeeping. Let's go through a 4-step process so we can set you up for success when you go to pay vendors. We're going to go through the vendor setup. We're going to use QuickBooks as an example. We're going to go through the documentation that you want to gather when you're setting up your vendor. And then we're going to go through the approval process. We want to get an approval for any payments we're about to make, and then how we can actually make those payments. And finally, we're going to touch on tax reporting related to certain vendor payment. All right, let's dive into this. So let's define who are your vendors. They could be your suppliers. They could be outside consultants. It could be hardware, software, real estate. You could have leases. These are going to be expenses that you are paying on a regular basis. It does not relate to payroll. Your employees are not your vendors. These are going to be third-party outside vendors. So when you're setting up a brand new vendor in your system, what information do you want to obtain from that vendor to properly set them up in your system? And we're going to use QuickBooks as an example. The basic information, the basic of basic, you want to get their name, address, contact information, email, phone number, website, and ultimately we're going to get their tax ID through this tax form called a W-9. When you set up a vendor, you're going to request a W-9. The W-9 will give you the legal entity of the vendor that you're working with. Also, if they're using a DBA, doing business as, you'll get an address, you'll get their zip, you'll get their city, their state, you'll get their tax ID. They'll also identify what type of entity they are. Are they a limited liability company, C corporation, S corporation? Are they an independent contractor? That is going to be a critical piece of information that we're going to go through later in this video when it relates to tax reporting. There's going to be other pieces of information that we are going to want to gather when we're setting up a vendor. It's not a bad idea to set up a vendor profile form when you're gathering this information. That can simply just be a Word document to gather the basics that we already covered: name, address, city, state, zip, website, phone number, etc. The next piece we talked about is a W-9. You want to request a W-9 from your vendor. They are required to give you a W-9. If they refuse, technically you're supposed to do backup withholding from any payments that you make to the vendor. Backup withholding can get very complicated, so most people are going to want to comply by giving you a W-9. Next, you're going to gather items that you may or may not have in each situation: a contract, an engagement letter, a statement of work. These are all documents that you want to attach to your vendor profile so you can reference them anytime you're making payments. Sales tax considerations. Are they exempt from sales tax? Banking instructions. How are you going to pay them? Are you going to pay them by ACH? Are you going to pay them by wire? Or do they want a check? Do you need a certificate of insurance to validate that they have liability insurance for the work that they're going to provide for you? Do you need to run an OFAC or a regulatory check on the vendor to validate they are not sanctioned or on a terrorist list? A lot of banking and investment managers need to run this before they can pay any vendors. Again, this is not a comprehensive list. Not every scenario needs this level of detail, but I wanted to give you some examples of what you might need when you're setting up a vendor. And once you gather all the documentation that you have for your vendor setup, you want to attach it in your system. Like QuickBooks allows you to attach all your PDFs, docs, whatever you have within the vendor profile. A lot of other systems have that. If your system doesn't have that, set up a folder system on your network where you can save all your vendor information in case you need to reference it later down the road. Once you have your vendor set up, you'll start receiving invoices, installment payments, whatever. And before you make any payments to the vendor, you want to make sure somebody approves the invoice before it goes out, whether they're checking against the contract, whether they're the department head. You want somebody looking at the invoice, validating that the work, the accuracy of the invoice is good to pay before you go out and just pay an invoice. Some examples of approvers would be an owner of the company, department head, purchasing department, project manager, executive board of directors. Any designated approver of the invoice is a good best practice and internal control to have for your accounts payable process. Once the invoice is approved by the appropriate party, we can move to the next step, which is actually making a payment for the invoice. Much like receiving payments from your client, there's a lot of variations and options to paying vendors depending upon how they are set up. You can cut a check. You can pay them by ACH and wire. There's pros and cons to each. I don't love checks these days. I think there's a lot better options than cutting a check and sending it in the mail. That's the slowest way to making a vendor payment. ACH is a great option, fairly inexpensive. You just need to make sure your bank has that capabilities. Most standard checking accounts will not come with ACH automatically. Wires, this is a quick way to send money, but it's one of the most expensive ways to send money. It will go instantaneous. It should arrive within the same day, sometimes within the same hour, but they can cost $30 to $50 a wire. A lot of vendors will have a website where you can just pay them directly online. That is also a great option. It makes it a lot easier to match up invoices. When you pay through the vendor's website, you can pay using a corporate credit card if the vendor accepts credit card payments. Also, there could be financing or credit related to the vendor, depending on what it is. Maybe you get bank financing. Maybe the vendor provides financing for you where you pay in installments. That is another option to pay vendors. Once you pay your vendor, you want to put your full package of support together. You want to include a copy of the payment that was made to go along with the invoice that was approved. So if you cut a check, you want to have a signed copy of the check retained for your records. And then behind it, you want to have the invoice and the approval and any other supporting documentation to go along with that check. And you want to save as part of your vendor records. This will come in handy, especially with checks if they never get cashed. Cash reconciliations, if you ever get audited by a state or federal taxing authority and you have to support your expenses, you have a nice set of supporting documentation for your expense. External auditors are going to sample your disbursements. This provides all the documentation they need for the internal controls, along with supporting the expense that was paid. Let's talk tax reporting, because there's tax considerations when we're paying vendors, and there are some obligations that the company has that they need to file with the IRS if they pay certain vendors. So let's go through that. You need to issue 1099s for these type of vendors: sole proprietors, independent contractors, single member LLCs, partnerships, LLCs taxed as a partnership, anything that is not incorporated. So S corporations, C corporations, LLCs taxed as a corporation, those are not going to receive 1099s. The most common 1099 that you're going to issue is a 1099 NEC, non-employee compensation. Now, as of 2025, you need to issue a 1099 for $600 or more of vendor payments. And just to reemphasize, it's for non-incorporated vendors, sole proprietors, single member LLCs, partnerships, S corporations, C corporations. You do not need to issue them a 1099. There's no harm, no foul. If you do, you can issue them a 1099, but you really don't need to. Now, 2026 and beyond, these limits will increase to $2,000. And after 2026, it will be indexed for inflation. So each year we'll get a new 1099 limit that is base $2,000 and then adjusted for inflation. This is very much welcome because this amount hasn't been changed in a very long time. I don't know the exact year, but that $600 has been there for a very long time and never adjusted. How will we know when to 1099 a vendor? This is where we're going to go back to the W-9 and look at the dirty details. What type of entity is our vendor? That is going to indicate whether or not we are going to 1099 that vendor. And we're not going to 1099 our vendors for everything. There's certain criteria that we need to look at to determine if that expense is 1099able. Advisory services from a consultant who's a single member LLC, we are going to 1099 those. Travel reimbursement for the consultant coming out to our location, not going to 1099 for those items. If you're buying goods from a supplier, not going to 1099 them. This is for non-employee compensation. You got to think, are they providing a service? Or are they selling you a good? Now, that's not comprehensive. There's a lot of things you should look to the IRS's website to determine. I'll leave a link in the description that'll take you to the IRS's website, and you can take a look at what items are 1099able and what items are not subject to a 1099. You have the tax ID information. You have figured out whether those transactions are 1099able. Now you want to look to your system and make sure you select all the necessary checkboxes or setup items so that your vendor will generate a 1099 at the end of the year when you need to generate 1099s. And here's QuickBooks as an example. I've entered the tax ID for my vendor, and I've checked the box that says track payments to generate a 1099 at the end of the year. So I got all my documentation related to tax IDs. I got my system configured to generate 1099s. At the end of the year, by January 31st of the following year, I need to run all my 1099s. I'm going to send one copy to the vendor, and I'm going to send another copy to the IRS. And this is how the IRS matches up 1099s when that vendor files their tax return. I'm not going to go in great detail, but I did want to mention there's a couple other types of 1099s. 1099 miss. This is the miscellaneous tax items. You can look and see what qualifies for a 1099 miss. 1099 INT, this is for interest. 1099 div, this is for dividends. And 1099K, this is one of the newest 1099s. That is for third-party apps. If you receive compensation from a third-party app, you might end up getting a 1099K. All right, that's setting up a vendor, from gathering the documentation to getting the approval to making the payment, and ultimately determining if you have tax reporting related to that vendor. I hope you learned something from this video. Have a good rest of the day, and I will see you in the next video. Take care and goodbye.
Yeah. 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 Yeah.